As for default, no longer this is an improbable event. I would not speculate how probable, because, of course, there are two factors there: how long the war is going to last, how long the sanctions are going to last, and also what would be decided around Russia having some ability to possibly pay some of its debt. And none of this is clear at this point.
Even the IMF speculating that it is not improbable. It's a big statement and a big deal. Let's bring in Leslie Picker, who's been doing some reporting on what a default would mean for the country and its stakeholders, and whether it can manage to pay. Leslie, is there any chance?
Yes. Sarah, I think the key market indicators would suggest investors see a very high likelihood that Russia misses its interest payment due next week. Credit default swaps, which compensate investors if Russia is unable to service its debt, have been surging. There's little confidence out there that Putin will be willing or able to pay, given the wartime financial sanctions on his country. That's already marked down performance for emerging markets funds and others with exposure to Russia, although most funds that we've seen have minimal amounts of investments in the region relative to their overall portfolios. But some emerging markets investors say that anyone holding Russian debt right now can basically kiss that money goodbye. Unlike when places like Argentina and Puerto Rico defaulted, there will it's unlikely that there will be an orderly restructuring process if Russia is still under strict financial sanctions. And Russia's contracts indicate unusually limited creditor protections relative to other places, according to Jay Newman, a sovereign debt expert. Now, if we look at Venezuelan as potentially a model after it was sanctioned, the bonds may trade at just pennies on the dollar, with U.S. investors only allowed to sell but not buy. You can imagine what that does to the prices.